Hey guys, all content discussed is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. Another day goes past, another day where markets generally contract in anticipation for the big event on Wednesday. All three major benchmarks ended red and so did GameStop and AMC. Ape shares made some substantial gains today, however, netting over 17% in gains. Again, remember that investors are preparing themselves in case talks turn hawkish at the Jackson Hole event. What's important and worthy of discussion is the new home sales data that came out. Sales for new homes fell in July for the sixth time this year. Purchases of new single-family homes fell down 12.6% to just 511,000. The report showed median sales price of a new home was up 8.2% from a year earlier, the slowest pace of price appreciation since 2020. Residential starts fell to the slowest pace since early 2021 and existing home sales, which make up the majority of the market, tumbled to the lowest level in more than 2 years. At this current pace, it would take 10.9 months to exhaust the supply of new homes. I don't want to be hyperbolic like the corporate media and say this is a housing crisis, but this does definitely sound the alarm that indeed the economy is recoiling even more so than it has in a long time and that we have not yet seen the bottom. I expect the situation to continue deteriorating. The energy situation in Europe is getting bleaker by the day as well. European power prices have soared enough that now they are equal to more than $1,000 per barrel of oil. Russia cutting supplies is pushing the prices of fuel 13 times its seasonal norm. So, it's been a while since we talked about the real estate of China and its current predicament. As you know, normally, the property sector accounts for about 25% of the nation's economic output. New reports coming out suggest that we could be seeing a serious and even violent contraction in the property market of China. Government intervention has been nothing short of dramatic, as their direct intervention has resulted in furthering the bearish performance of the economy. For example, financing for property development has decreased, property sales have tanked as much as 20 to 30%. If this wasn't enough, developments that are in progress are being abandoned and not being completed. Social unrest is beginning to take place, with citizens collectively agreeing to stop making mortgage payments. If this wasn't enough, as you already know by now, even the largest property developers are defaulting on their payments, with Evergrande being the biggest one. The issue with the property sector in China is that there is little to no bullish sentiment to look forward to or set hopes in, and this is going to significantly alter and extend the bearish decay by which it affects the overall economic health and state of China. The pressure is just too great, but I don't think based on what I have read that it is at the point of a housing crisis similar to that which we endured in 2008. Remember, China's economy is significantly different than ours. Banks are mostly owned by the state. This means they don't have to deal with the complex nature of Western banking systems. Chinese households typically have larger savings which will allow them to stave off economic hits. More importantly, demand for housing is high, which is a huge factor. Still, though they have these little pros on their side, the reality is that the real estate market is simply falling and China's government has been and should be unable to stop it in the short term. Next up, we need to talk about China's yuan, because their currency has dropped to its weakest level against the American dollar in 2 years. As the country continues to combat their own slowing economy and housing downturn, the yuan is highly likely to experience even further depreciation. Today, the yuan was trading at more than 6.86 to the dollar. The dollar has been moving higher and higher in valuation, fueled by recent data releases demonstrating that the economy in China is in very poor health. Our own Fed's tightening has caused a huge sell-off in Asian currencies this year, including more than 10% declines in the Japanese yen and the Korean won. With China's economy contracted by 2.6% in the April to June quarter, the weakening consumer confidence and impact of their zero-tolerance policies are hampering their ability to recover quickly. This would mean that the two biggest components of their currency, the interest rate differences and the economic growth projections, both paint a very pessimistic outlook on the future performance of the yuan compared to the American dollar. Next up, China's National Health Commission recently said that the pandemic has contributed to the decline in the country's marriage and birth rates, adding to rapid economic and social developments that will lead to profound changes. China had a fertility rate of 1.16 in 2021, one of the lowest rates in the world. China has indeed acknowledged that they are on the brink of shrinking, a potential crisis that will test their ability to pay and care for their elderly. China is an absolute mess all around and their economy is boiling up rapidly. It is only a matter of time until things go overboard unless China along with the rest of the world miraculously manages to fix all the fundamental problems holding them back. Dark pools trades for AMC accounted for 53% of the total volume while dark pool trades for GameStop account for 44% of the total volume. Today we saw various halts on AMC early in the morning. I was beyond frustrated watching how the SEC directly manipulates the price action of a stock. As a day trader myself, I have seen other stocks significantly move much more aggressive and not experience any type of SEC intervention, but God forbid ape stock moves volatile. Though it is nothing new or shocking, it is beyond annoying watching just how every element and system in the stock market directly works against our own best interests. That is all I have for you guys today. Make sure to check out my Discord and come check out my day trade alerts. Thank you all for making it to the end. Come over to my Discord and check it out. Other than that, I hope to see you tomorrow. Enjoy the rest of your day and to the moon.